When you hear Chinese investments abroad, you might think of the Belt and Road Initiative reaching into developing countries or high-profile real estate deals in major cities that often make the headlines. However, a growing amount of Chinese money is now flowing into the United States. This trend includes investments in areas that raise important concerns about national security, causing worry among many. The United States is in a tricky situation. It wants the Chinese investment for economic growth and job opportunities, but it also fears what these investments might mean for national safety and independence. Hi everyone, welcome back to Difference Frames the World, a channel that offers a unique perspective on global events. We analyze major international moves in plain language and upload videos daily. In this episode, Clara would like to discuss the huge investment from Beijing in the United States. Over the past 2 decades, Beijing has invested trillions of dollars in overseas spending. According to aid data, a research group at William & Mary, China has spent approximately $2.1 trillion abroad since 2000. Interestingly, this investment does not only target developing countries, a nearly equal portion is directed towards advanced economies, including the US. While commercial interests drive some of this investment, a significant portion is strategic, focusing on sensitive industries such as high-tech sectors, semiconductors, intelligence-linked insurance, and critical infrastructure. This approach has garnered considerable attention in Washington. One of the most striking and disturbing episodes in this story is the 2015 acquisition of Wright USA. This insurance company provided liability coverage to high-level U.S. intelligence agents, including those from the CIA and FBI. Here's how it unfolded. Fosun Group, a Chinese conglomerate, purchased Wright USA. This deal raised significant concerns in the U.S. because Wright USA had access to highly sensitive personal data, including the names, addresses, phone numbers, and claims history of undercover or covert intelligence operatives. Furthermore, it wasn't just private investment involved, for Chinese state banks provided a $1.2 billion loan, funneled through the Cayman Islands, to facilitate the acquisition. After the deal was made public, the Committee on Foreign Investment in the United States launched an investigation. In the end, Wright USA was sold again, this time back to an American owner, though details surrounding who initiated or mandated the sale remain unclear. For many in the U.S. intelligence and counterintelligence communities, this acquisition was significant. It could provide access to sensitive personal data about frontline agents. A former CIA officer noted that controlling such an insurance company could help obtain information on the identities of secret agents. Investing in various sectors goes beyond profit for Beijing, it is part of a larger strategy. In 2015, China unveiled its Made in China 2025 initiative, which aimed to dominate 10 critical industries, including robotics, electric vehicles, semiconductors, and advanced manufacturing. Although public references to Made in China 2025 have decreased over time, analysts argue that its underlying spirit persists. China is making targeted investments abroad to acquire or influence companies that produce advanced technologies, with the intent of bringing that expertise back to the country. A good example is Nexperia, a company that controls 40% of the global market for car chips. In 2019, Wingtech Technology, a Chinese company, acquired Nexperia from a Dutch firm. Although Wingtech operates as a private entity, it is partially state-owned and has ties to Chinese government asset management organizations. This ownership structure has raised strategic risks and national security concerns among European authorities, particularly in the Netherlands. They are increasingly worried about the potential transfer of critical intellectual property and expertise from Nexperia to its Chinese parent company. In October 2025, the Dutch government intervened by taking control of certain management decisions at Nexperia through the Goods Availability Act. This intervention prompted a response from Nexperia's Chinese operations, reportedly leading to production cuts at its Dongguan plant. In retaliation for the Dutch government's actions, China imposed export restrictions on Nexperia products manufactured in its Chinese facilities. Although China later lifted the export ban, this incident highlighted China's leverage as a stakeholder in the competition for global tech dominance. The Wright USA case and other Chinese acquisitions in sensitive areas of America are more alarming to the US than Nexperia is to the Netherlands. Many US policymakers see a real risk that unchecked Chinese capital could flow into sensitive areas, potentially eroding US technological leadership, compromising data security, or even enabling espionage or dual-use threats. A report from the Council on Foreign Relations, CFR, highlighted concerns that Chinese investment in advanced US technology isn't merely an economic matter, it may also be strategically aimed at gaining access to cutting-edge innovations. How significant is the flow of Chinese money? It's not just about the Wright USA example. State-backed Chinese funds have been invested across a wide range of US sectors. China has supported thousands of projects globally, investing substantially in developed countries, including the United States. Chinese banks have lent hundreds of billions to various US projects. These loans have helped finance a variety of US infrastructure and tech initiatives, ranging from airport terminals and data centers to gas pipelines and corporate operations of major companies. Additionally, Chinese investment has facilitated significant acquisitions and stake purchases in US tech firms across sectors such as semiconductors and biotechnology. Even US President Donald Trump was reportedly connected with Chinese banks. In 2012, Trump's real estate partner refinanced a building with the Bank of China in a $950 million deal, but the bank sold off the debt shortly after. A 2024 House Oversight Committee report indicated that Trump's businesses received millions from Chinese state-owned entities, including rent from the Industrial and Commercial Bank of China for Trump Tower and payments from Hainan Airlines, both of which have government backgrounds. Similar to the Wright USA case, foreign control over companies that collect or hold sensitive personal data, especially that of intelligence personnel, is concerning. Even without an explicit spy ring, having access to such data could create significant vulnerabilities. TikTok's situation highlights data sensitivity. In 2024, the US enacted a sell-or ban law requiring ByteDance to sell its US operations for TikTok. After challenging the law, the Supreme Court upheld it on January 17, 2025. Although TikTok was briefly taken offline, Trump delayed the ban, allowing the service to be restored. A proposed deal seeks to transfer TikTok's US business to an American-led group, including Oracle, with US control over the algorithm. Trump supported the initiative via an executive order, but concerns about ByteDance's influence and ongoing delays create uncertainty regarding the agreement. The US lacks any app that can compete with TikTok, even YouTube Shorts cannot keep up. The essence of TikTok's innovation lies in its algorithm, and ironically, the US seeks to extract it under the pretext of national security concerns. Nowadays, the US is more inclined to use national security as an excuse to outcompete foreign companies, especially those from unfriendly nations like China and Russia. For instance, when Chinese-backed firms acquire US tech companies, there is a risk that advanced knowledge and technology could be transferred back to China, either legally or covertly. Even minority investments or non-controlling stakes can be impactful. Through board seats, joint ventures, or partnerships, Chinese firms could gain access to research and development, talent, or intellectual property. The West constantly accuses China of IP theft, but the reality is that China is already ahead in most critical technology areas. A report by the Australian Strategic Policy Institute, ASPI, indicates that China takes the lead in 37 of 44 critical technology areas based on high-impact research papers from 2018 to 2022. Among those 44 technologies are defense and space, AI and robotics, energy and environment, biotechnology, and advanced materials and quantum tech. China's research output in some fields significantly outpaces its competitors, particularly in advanced communications. About 20% of high-impact papers are authored by researchers trained abroad. Beijing's lead in these technologies gives it an economic and military strategic edge, raising national security concerns for other countries, particularly the United States. It could lead to potential monopolization in various high-risk technology areas, affecting global supply chains. At present, China's successful research model emphasizes both high volume and impact of publications, coupled with a strategy to import and leverage foreign talent. The United States and its allies need to rethink research funding, technology protection, and global coordination to mitigate the risks posed by China's technological advancements. Chinese investments could also create political leverage. By investing in or lending to U.S. infrastructure, China might establish long-term economic ties, making it difficult to sever those relationships later. The U.S. is responding with stricter regulations, but China is playing a long game. With state banks, political backing, and strategic direction, Beijing can afford to be aggressive in its approach. It is not just private capital seeking profit; in some cases, state power is backing the investment. China's investment strategy is not just an economic issue, it also has significant geostrategic implications. Beijing is leveraging its financial power not only to achieve returns, but also to influence global technology and infrastructure in ways that align with its long-term objectives. As China invests more in high-tech industries in the U.S., the two economies become increasingly interconnected. However, this relationship is also marked by competition and caution. This dual dynamic of interdependence and rivalry is shaping the 21st century. By strategically investing, China can gain access to critical sectors, thereby enhancing its soft and hard power capabilities. In today's world, where technology and data are as crucial as military strength, this influence is significant. The U.S. and other countries are tightening regulations, but China's financial system can absorb risk more effectively. It creates a long-term competition over who can invest, build, or strategize more successfully in critical areas. If foreign entities, especially those linked to state interests, own companies that manage sensitive personal or national security data, as in the Wright USA case, it presents more than just a business deal, it introduces a potential risk. As China continues to invest in sectors such as AI, microelectronics, quantum computing, and biotech, these efforts could enhance its technological self-reliance. The U.S. is already taking steps through regulation. The challenge lies in whether it can effectively outpace or deter Beijing's strategically patient and well-funded approach. Like the Wolf Amendment, it has not stopped China's space exploration, but it has compelled China to find its own solutions and foster self-reliance. This issue extends beyond the United States. Other advanced economies are also facing the influx of Chinese capital. How these countries choose to regulate, partner with, or resist such investments will shape the next phase of globalization. Chinese investments in the U.S. are many times higher than U.S. investments in China, totaling hundreds of billions of dollars. What are the reasons behind such a big difference? Please provide your insightful comments below to enlighten other viewers.